All right, you guys. So we have some good news for EOSE or Eos Energy Enterprises. Eos Energy has been making headlines. You remember I initially dropped a video a while back on this stock. I think it was around $6, $5, going to $6 or $6 mid range or whatever it may be. And I was so sure about this stock, and I was saying, put in as much money as you can in order to take advantage of this penny stock, right? And look at this. We went from $5, around $5-6 to $11, right? So if you would have put a decent amount, you'll be in a good space. So right now, everyone who have put some money in Eos Energy, please drop a comment, share, like, subscribe, all of that good stuff. But I am just here to share some penny stocks to look out for in order for you to make some good money without having to spend a lot of money. So that's the goal. So right now Eos Energy is ranging around $11.21, $11.19, $11.25. So we're up good 10% today. A dollar today, which is pretty good stuff, and we crossed our initial target, which was $10. So let's take a look at some news on Eos Energy in order to kind of get an idea. Now, this is the thing about me. I trade technicals. So I trade technicals, so I don't look at news until stuff happen afterwards, because I already know the news is going to follow the technicals. A lot of people say technicals follow news, but I say it's similar to like how we as humans, we react to our environment. It's the same way. News follow technicals, technicals follow news, and it's just an ongoing cycle. So if you're looking at the technicals, it's going to represent the news. It's going to represent what's going on with the charts, what's going on with the actual business, the market, when you're looking at technicals. So my history and my background is trading Forex in the past, futures as well. And so I still trade futures, but I started off in 2014, 2015 trading Forex. And so I made good money with Forex, made some good stuff with Forex, and I had a thought maybe I should apply everything I know from Forex in terms of technical analysis to stocks. And this is what's going on right now. So that's why I say stock trading is not hard once you understand the language of the charts. And once you understand the language of the charts, you pretty much have everything handed to you. You can run up stocks, you can run up futures, you can run up Forex, you can run up options, you can run up everything, right? So let's get started, right? So right now it's saying breakthrough tech breakout stock. Eos Energy's moment has arrived. So I was already preaching this because this is an energy related stock, and it's an American based energy. And if if you're up on the news lately, and the current administration, there's a lot of talk on bringing technology, bringing manufacturing, bringing all this stuff back to America. So when something is saying something American-based energy company, that's like a light bulb for me, because this is what's being talked about. This is what's being talked about. And then not only that, we're in the AI age. So we need as much energy, as much storage. We need this type of infrastructure. We need this type of stuff in order for this country to actually be competitive in terms of the AI market. So to me, it was a no-brainer. I just so happened to see it at that low point and to get in before anyone even knew about it. So you can go and search everywhere you want to search. Hardly anyone was talking about Eos Energy, but I was. So I try to find things before they actually get to the point where it's popular. That way it gives us a chance to accumulate, to continue to pile up the stock, putting in shares to the point when people start talking about it. That's usually when it's too late. But when people start talking about it, we take advantage of the news. We take advantage of the popularity. It's just like how Bitcoin and Ethereum. When Ethereum was $300, I was telling everyone it's going to run up to $3,000. I think that was around pandemic times and into 2021. And lo and behold, the end of 2021, it ran up and it never came back down from there. So let's see what's going on, right? So about the stock, look at the revenue growth for the year, like 128% revenue growth. This is amazing. So what they're saying here is positioned to lead the long duration energy storage market. I think they have what it takes in order to lead this actual market, because there's not as much competition, and this, like I said before, this is American based. So with differentiated zinc based battery technology and a strong $600 million backlog. So that means that there's orders. There's a backlog of orders, $600 million worth backlog of orders for this actual product. And so that means there's a high demand. And if there's a high demand, all they need is to fill in the supply. And filling in the supply most likely is gonna pique some interest in investors to try to help them, invest in the company, all that stuff, so they can fill their supplies, but and also get the actual material needed in order to do so. But this is very good news. I haven't even read this before. This is my first time reading it live on the camera, right? So EOS's technology offers safety, cost, and supply chain advantages over lithium-ion, targeting high growth sectors like utilities and renewables. Good stuff. Despite high risk and ongoing cash burn, recent technical breakouts of DOE funding signal growing market confidence and potential for rapid revenue growth. If EOSE executes on its aggressive expansion and profitability targets, shares could be significantly undervalued at current multiples, offering long-term upside. I'm seeing this long-term upside. So my first target was $10, second target $30. I think this is going to run far beyond that. So if you don't know what EOS does, they manufacture zinc-based battery systems that provide long-duration energy storage. While most batteries are lithium-based, zinc has shown that it can be more efficient for shorter charge cycles, like 3 to 12 hours. Unlike lithium-ion, which is better suited for shorter discharge cycles, this could potentially position this technology better for utilities, data centers. Remember, AI. Data centers. We are in need of more data centers for chips, AI, all that stuff, right? For in order for us to advance in this actual space with technology and artificial intelligence and renewable energies, all very interesting growth areas, right? So I don't care about all this stuff, because you know what? I see what I see. I don't need to look at this stuff. A lot of people look at all this fundamental stuff, but I don't know. I just don't. Like, I can pinpoint a market before without looking at this stuff, and then I can see it going where it goes, and then all this stuff changes based on where it's supposed to actually go. So this is the income statement. I'm pretty sure they're doing pretty good with the income statement. I checked it back during their earnings call in the past. To me, it's okay, right? So zinc is cheaper than many battery metals and could store more energy, right? So all right, so let's take a look at some more stuff. What this say? All right, so it's the same actual. Oh, they want me to create an account. I'm not creating an account. Not right now. Same actual thing. Zinc technology filling in the market gap. Same. What I was trying to say. Same website. My bad. Same website. So let's move on to something else. Eos Energy. Now the DawnOS platform is a new platform that they released, and which is pretty much going to change a lot of things. So earlier this month, Eos Energy Enterprises announced the launch of its proprietary DawnOS battery management system, designed to optimize the performance, security, and flexibility of its zinc-based energy storage solutions for the U.S. grid. Remember, American-based, this is needed. U.S. grid, sustainability and all that stuff is needed. The rollout of this advanced, fully domestic platform with automated controls and real-time analytics directly addresses emerging national security concerns. These are key words. Remember, certain stocks will always there'll always be profitability in certain stocks and growth in certain stocks, depending on the actual sector and what is out there to do. When you see stuff like addresses emerging national security concerns and operational challenges in large-scale battery deployment, and this is the solution that they're providing, then this is a green flag for you to get some stocks or get some shares. We'll explore how the debut of DawnOS, with its emphasis on secure, intelligent grid integration, could influence Eos Energy's growth outlook and investment narrative. Okay. Let me see what they're going, where they're headed at with this. To be a shareholder, you need to believe the demand for grid-scale Znyth-based storage will accelerate as U.S. grid modernizes and prioritizes domestic secure energy solutions. The recent launch of DawnOS, which strengthens Eos technology value proposition and addresses cybersecurity concerns. You see, these are the keywords. Appears supportive of key growth catalysts, but does not fully resolve short-term risk around persistent net losses. And there's always going to be risk anyway. One closely tied announcement is a recent follow-on equity offering of $75 million, which directly strengthened its ability to scale manufacturing and deliver on the momentum from DawnOS. This financing move is crucial given the company's ongoing investment, operational expansion, and the capital intensity of ramping up advanced battery systems. Right? So anyway, a lot of jargon. Let's head on to what I love most, the charts. So with the chart, right, so Eos Energy Enterprises, remember, down here is where I was crying for everyone to get in. My shares, my average dollar value of my shares is $6.45. I initially got in a little earlier, but I sold them, got into another stock, but then I came back and dropped some more in this stock. So what I was saying before is this, right? Initially my target was here, so it's still my first target because this is a nice big order block on the monthly time frame. This is a nice big order block zone on a monthly time frame. So this is a zone where it can react and kind of come down. So this is still a very red alert zone. So it can still push down, right? So that's why this was my first target, the $10 range, the $10 dollar value. But I know, excuse me for yelling, but I know this is gonna catch on so much momentum, and it may just take off the top. And this is what I call take off the top, the previous high, which is around 32 to 35ish, around that range time frame. And that's what I'm thinking, my actual analysis, where it's gonna go long term. It may even go beyond that, but seeing what I'm seeing, previous low, and then we have a manipulation on the bottom right here, the slight manipulation on the bottom, and it started taking off. That is telltale sign that this is a very strong stock, very strong business, and very profitable business. If you get some shares, you'll be a very profitable shareholder. So this is what the chart is showing, and let me tell you something. We don't even need to look at these EMA stuff, but let me tell you something. With that, this is a no-brainer. Like, you should be right now. Not right now. Wait for it to come down. Once it comes down to a nice sustained, nice zone, get you some shares or even drop some options plays on it. But keep in mind, I'm not a financial advisor. Don't take my advice based on whatever. But this is for educational and entertainment purposes. I have to say that because I'm not going to tell you to do anything with your money that you don't feel comfortable with. So you have to feel comfortable with it. And if you're going to trade something like this, if you're going to trade anything, it has to be money that you're willing to lose, because remember, the stock market is unpredictable. Even if we have reassurance with the charts and the fundamentals, but you want to only spend money or drop money in there that you're willing to actually lose. And remember, you can just dollar cost average if you don't have a lot of money. But this is a low cost share. Remember, I got you guys around here, $6 before the breakout, and now it's broken out. So that's the same thing what I did with you guys with Joby. Let's go to Joby, right? Joby, I got you guys around this zone around $8, and then it broke out. Listen, I'm telling you guys, I can see this stuff before it happens. So there's a lot of plays. Archer as well. A lot of plays. Archer is looking crazy, but Joby, I got you guys, and then it broke out, and it's no longer a penny stock. So I get penny stocks before they become adult stocks, right? So that's the name of the game. This is another one. Keep an eye on Eric, American Resources Corporation. Keep an eye on this, because this itself, it's at $2 right now, but this may be another potential home run. Based on what I'm seeing, it may be another potential home run, and this is something I saw when it was around 230. So yeah, but back to Eos Energy, man. Right now we're at $11.31. If you bought some of this stock, congratulations, you made some good money. If you didn't, it's okay, you missed it, but it's still low. $11 is still a decent price. And just wait for a red day. Of course, you're gonna know red day. You know red days are gonna come regardless. Look at the NASDAQ or whatever, and whenever there's a red day, for EOS Energy, when people start selling, that's gonna be a chance for you to buy. So that's where we at with it. Like I said, if you bought some shares, congratulations, you ate. If you didn't, it's cool. There's always going to be future opportunities. Let's get it. EOS Energy. I'm good. I'm feeling good about it. But like, share, subscribe, comment. Let's go, y'all.